to give you an update, what's happening to the economy and the financial markets. Let me start with the economy. Okay, so I guess all of us know the economy is not doing well. Because when we have a coronavirus, basically we have a sudden stop. Because look at us as a proxy today. We don't go out. We definitely spend a lot lesser. We buy less things, and we're just at home. We don't go and socialize. We don't go for entertainment. So definitely, the transactions in the world has reduced. So US just published its first quarter GDP number. So the GDP is minus 4.8%. Later I'll show you where does 4.8% stands. Okay, but you got to remember that's still the first quarter. And this thing really started to be serious, right? End of the first quarter. At the same time, because as companies are not having businesses, so they don't need people, and then they lay off people. Think about US, as a proxy for the world. So today I'll say the layoff, you read the headline. So millions of layoff set to push unemployment rates to the highest level since Great Depression. Great Depression happened in 1929. So this was, even so as at now, we have exceeded the unemployment level in the Great Recession in the 2007 to 2009. And currently the unemployment rate in US is about 15%, and it's still climbing. Okay, let me show you some statistics. Okay, this is what I shared with you about the GDP. Right. So the GDP has contracted 4.8% annualized in the first quarter of 2020. So if you look at the orange bar, right? So I said, well, definitely in the last 10 years, we've not seen something like that. We have to go back to the Great Recession to see something as a contraction as large as this. But as I said, we've got to bear in mind, this number is talking about the first quarter. So the economic sudden stop, I think, in the second quarter will be even worse than the first quarter. We don't know the number, so I think it could be contracting by, my guess, around 10%. What is after that? Actually, as I said, nobody knows at this moment. But I can share with you some of my view, some of my insights into what may be coming. Just some of these numbers, like auto sales, it has declined, by close to about 30+%. Services, it fell a lot more than 2008. So I said now it's like minus 10, but definitely a lot more than 2008. Similarly for business investments, restaurants. So all this has been falling off the cliff in terms of the economy. Okay, then I'd like to share with you this, the jobless claim rates. Okay, so 30 million Americans filed for jobless claim in the past 6 weeks. How significant is 30 million? Americans' working population is about 150. So 30% makes up about 20%. So just in the last 6 weeks, 1/5 of Americans' working population has filed for jobless claim. So if you look at the line, the blue line, that doesn't mark the edge of the charts. That is actually a spike up. So you can see this chart actually started from 1970 to today, but nothing is as significant as this in terms of the jobless claim. Businesses, who doesn't have business, then now go to so it's a vicious cycle. So now they fire people, and now people out of job, they don't have salary, and they cannot consume. Then that will feed into the businesses having even worse revenue. So definitely, as I say, we've looked at the economy. I don't think we're out of the woods, definitely. Numbers are looking, I would say, terrible to say the least. So that's why we have been having a lot of stimulus. How about the financial markets? Let's take a look. Okay, firstly, I talk about the MSCI All World Index. This, I think, is a very good proxy for the whole world. It basically measures the stock markets of most of the major countries, developed plus developing. So towards the end of February, the stock market started to fall off. So it fell 40%. It reached the bottom on 23rd of March. Ever since, it's been climbing. So it's up 22% since. Let's look at the US stock market, represented by the S&P 500 over the same period, 1st January till today. So the drop was also quite the same, a decline of 34%. Also on the 23rd of March, the pivoting point was on that date. Yeah. So at the point it pivoted and it started to climb 28%. Let's look at the bond market. So the bond market also fell, but usually bonds will fall less than the stock market. The pivoting point is also very close. It was on 19th of March. And after that, it's been climbing 5%. Gold. Okay, gold also dropped off sharply. It dropped off 13%. The pivoting point was 19th of March. And after that, it climbed 17%. Actually, what is magical about 19th of March and 23rd of March? Why did the economy continue to flounder, yet the financial market started to turn? Was there a magic? So clearly right now, there's a disconnect between the economy and the financial markets. So the economy continues to trend down. How deep more? Nobody knows. However, the stock market has already been climbing. As I say just now at the start, at most time, the economy and the stock market tend to have similar direction. So when the economy goes into a recession, the stock market don't tend to do well. Then why is it this time around the economy is still going south, but yet the stock market started to go north after the 19th and 23rd of March? Okay, so the pivoting point really comes from the central bank. Of course, the biggest central bank being the US Federal Reserve. On the 18th of March, they declared that there will be quantitative easing, which is printing of money, by about 750 billion. Okay, and after that, they say that on the 23rd of March, on the exact day when the equity market started to turn, was when 750 billion was not enough. So Federal Reserve started with QE Unlimited, which is saying that we'll do all it takes, you print whatever money is needed to turn the stock market around.